Welcome to another stage analysis video. It is Sunday the 25th of June 2023. I'm going to start off today's video going through the major indexes before looking at the industry group relative strength rankings, futures charts, IBD bell curve, some of the key market breadth charts in order to determine the current weight of evidence before we get into the final part of the video where we look through some of the watch list stocks and group themes that have been coming up over the course of the last week. So we will get to that in a bit. So as I said, starting off, we'll get into the major index charts, starting with the S&P 500, with what this has got a special chart that we use for I create for the members underneath called the combined percentages of stocks above their 50-day, 150-day and 200-day moving averages combined. Generally won't find this anywhere else. Don't think anyone else does it in this way. But I've found over the years this is a really good breadth measure in order to track both for strategy reasons and for helping with market timing and risk management. So at the moment, it's pulling back. We're in the 46% level at the moment, so that are above both their short, medium, and long-term moving averages. So a little bit short of the midpoint here, pulling back this week a fair bit. I think we dropped off over almost 9% on the week, so quite a sharp pullback. We were in what we consider a positive environment when it's above both the moving averages and rising, but it's pulled back into between the two moving averages, so we're in a more neutral environment here. And as we can see, the market S&P 500 pulling back this week by only minus 1.39%, but there was a number of sharp pullbacks across the board. Some of the leading groups held up much better than some of the laggards this week, in fairness. So we'll go through that in a bit when we look through the industry groups relative strength rankings. But obviously it was a little bit extended in the short term in terms of on the daily. If we look at the daily, it's got above the 380 ATR level. I talked about that on last week's video in terms of it being extended at the 380 ATR level, and when we tend to get out of the normal range, it needs to correct or consolidate for a while. So we've had a fairly modest correction at the moment. You can see the spreads have been fairly tight. Did attempt to rally on Thursday, but fell back over again on Friday. Again, some heavier volume there, but didn't roll over completely. Still holding around that plus 180 ATR level, but just closing underneath it. So potentially turning off this short-term uptrend. So we determine a short-term uptrend as being above this plus 180 ATR level. So just sitting right around that level at the moment. So in a neutral position at the moment. Obviously could go either way from that point. But you can see the breadth here, percentage of stocks above their 20-day moving average in the S&P 500 has tailed off quite a bit. We've dropped down from the upper zone here. So when we tend to be in an uptrend environment, you can see during these areas, when it's above the 70% level, tends to be in some kind of short-term uptrend move. So through this area here too, but then back above here. So at the moment, we've just turned that off a bit, come back down below the 50% level here. So 45.8% above their short-term moving averages and very short in terms of the 20-day EMA there. So just underneath a month's worth of data there. So we look at the NASDAQ 100, similar kind of move, minus 1.28% on the week, percentage of stocks at 70%. So still in a bullish position in terms of above that 60% level. So when we're above 60%, we consider it to be in a stage 2 type position. But generally when it's above all of the short, medium and long-term moving averages. So this is just the 200-day on its own, but this is a longer-term moving average. So you tend to be when you're above that 60% level in a more stage 2 environment, but not necessarily all the time. You can see we can still be potentially in stage 1 at that point too. So at the moment, holding above in obviously the recent levels here, pulling back a little bit, but holding around 70%, but extended in the short term, hitting a level of resistance from the early January swing highs here. Look at the daily chart again. Last week got above that 380 ATR level, so a correction was needed at that point as it was getting a little bit extended. So it's back in a more healthy position at the moment, still in this short-term uptrend, which it's been in now for the last few months here. As you see, it's been holding above that plus 180 ATR level. You can see the percentage of stocks above their 20-day in the NASDAQ 100 has also tailed off this week with a little bit of a breakdown move here, so only at 54%, but still above the midpoint at the moment. So still in a short-term uptrend again, but obviously at the lower end of that. If it does start to break down from here, then obviously could need a much more steeper correction back towards the 50. But at the moment, still there. Same with the NASDAQ Composite, similar position, minus 1.44% on the week. Again, getting close to older resistance levels. We've got this level across here, which hasn't got up to yet, around that 14,000 level. So a good run for the last few months here. So a single week correction is not too much to worry about yet, but obviously could need to correct a bit more here. We're a little bit extended from the moving averages, so well above this, plus this 10-week moving average and the 30-week moving average here. So could need to consolidate sideways for a while or correct. But at the moment, percentage of stocks above their 200-day is at 38.1%, so well below the midpoint at the moment. So not exactly in a strong breadth position in the NASDAQ, but it is in stage 2. Daily chart, similar kind of look. So if I stick the free ATR levels on this, you'll be able to see that again, got above that free ATR level, pulled back into the 1 ATR level at the end of the week here on some heavier volume there. So let's see how that reacts this week. NYSC, on the other hand, still hovering in this stage 1 base structure. So been going sideways for a while here. It's fairly tight range between this 14,800, 16,000 area, roughly. So at the moment, right in the mid zone, hovering around the 10 and the 30-week moving average there, but pulled back this week, a little bit of an engulfing bar, not too much, minus 2.06% on the week. Percentage of stocks is at 52.43%, so in the mid zone, what we consider the stage 1 zone, obviously in stage 1 on the chart in terms of its position on the chart and the position of the moving averages, etc. Russell 2000 had another failed attempt to move out into stage 2, so we've had a few now. So a little bit of a weaker attempt over the last few weeks and rolled back over again. Was the weakest on of the major indexes over the last week, minus 2.89%. You can see this major zone of resistance, which it just hasn't been able to push through recently. But then the near term, this significant bar is still what we need to consider. That's when the regional banking crisis began, and it broke down from that failed breakout attempt there. So we're still within that range at the moment. It just can't get back above that. Until it breaks that, it can't be pushing out into stage 2. But if it does start to clear this 190 level, then we'll be moving back out into stage 2. But if it does start to roll to the downside here, obviously starts breaking the below this 170 and below area, then could obviously potentially fall back down into stage 4. But at the moment, still neutral, still stage 1, but underperforming the other major indexes. So S&P 500 and NASDAQ 100, etc. Much stronger at the moment. NASDAQ still leading. Look at the daily chart. Back below its 21-day moving average here, and still hovering above the 200 and the 50-day, and the 50-day is still below the 200 here. So potentially support in this area here around this 178 area. We've got 178.36 on the 200-day at the moment. We've got 177.67 on the 50-day. So potential support in the near term. If they don't hold, then obviously could get worse there, but looking for some kind of rebound attempt from that area potentially.